Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. As the slide extends now into the 8th consecutive day, the Australian dollar bearish trend has deepened following the break of the recent level of 66.80 and also the 60-day simple moving average. As the market declines, we now look towards a level of 65.70 or 65.30. And given the fact that we are extremely oversold, I am anticipating a bounce very soon. That could see a move back towards 66.75 to 67 cents. But that being said, we do need to see some of these indicators to shape up to more to a bullish bias, which isn't showing at present. Let's see how the market plays towards the levels around 65.30.70, and if it does generate a bounce, then hopefully we can get a recovery back towards that 67 mark as mentioned. The euro fell on Tuesday as the US dollar index, which measures the greenback strength against the basket of 6 major currencies, edges from 104.30 to 104.50. As the weakness weighs on the market, the support level now seen at 108.35 and does play a key point. Failing to get a bounce from there would expose the region of 107.65 to 70. But I do anticipate the market may actually stage a bounce from 108.35 and if so, could see a move back to 109. Besides the PMI to be released in Europe later today, all eyes will be on Thursday's GDP in the US and also the Friday's core personal consumption expenditures, or the PCE price index, which is the Federal Reserve's preferred inflation gauge, which may provide crucial insight into how the inflation trend is going and also some timing of when we may get a rate cut out of the US, with some seeing September and some are looking for next week when the Federal Reserve meet for 2 days. Along with the rate decision, we also get Federal Reserve Chairman Jerome Powell attending his usual press conference and taking questions. The bears are weighing on dollar yen as it now approaches the key level, which is at 154.70.90, and a break there sees no safety net until around 150.5. It is a big level, so if you're trading dollar yen, traders should exercise caution, monitoring technical signals closely and adjust risk management strategies due to the high market volatility. In favour of the downside move, the ADX is trending to a bear case, so therefore let's see if it does reinforce the downside, as the other two indicators are also married up to the bearish case. Sterling is also a little bit to the weaker side as it now looks towards that 128.885 level, which anticipates a bounce. And if so, could see a move back to 129.80 to 130.5. But if the market does take out the level of 128.80, then stops will be triggered down towards likely of a target of 128.10.15 and reassess. Turning to commodities, spot gold has managed to hold above that 2,400 level since that plummet that we saw last week. And as the momentum increases, could see a rise on to 2,422 to 2,450 as a potential target. I like the way this market is structured to the bullish case and therefore could see this bounce increase to its suggested targets. But a close under 2,394 will negate the topside target and instead bring in the opportunity around 2,345 and reassess. Wrapping up with oil, when the market took out the key level of 77.40.60, now exposes the region down to 73.60.80. But before we get too bearish, do keep an eye on this RSI indicator, as bullish divergence is unfolding, and if so, could negate this call to the downside and see a bounce back towards this topside level around $78. Well, that's a wrap. Thank you for joining me. As always, look out for the intraday report, and I hope you enjoy the great start to the day.